voice of FinTech.
Welcome to Voice of FinTech, a podcast mapping out the Swiss and global FinTech scene, connecting FinTech enthusiasts with startups, incubators, accelerators, business angels and VCs, and incumbents interested in partnerships. Voice of FinTech will help you navigate the FinTech ecosystem. Here you can listen to the startup founder stories, what investors and incumbents are looking for when dealing with startups, and find out more about resources provided by incubators and accelerators. My name is Rudy Falad and I'll be hosting this podcast. Hello and welcome to Voice of FinTech. Today we're talking to Michael, who is a co-founder and CEO of SafeSide. This is an InsurTech based in Switzerland, and we're going to talk about how he and his co-founders are planning to shake up the insurance world, how you can get the life insurance more efficiently or effectively as well, whether that's through their service or how is it done today, which is through brokers or comparison sites or directly, and why this should be changed. So welcome, Michael. How are you today?
I'm fine. Thank you very much for the invitation.
Great. Thank you for joining. I'll start from the very beginning. Can you introduce yourself and especially tell us how and why have you decided to start your own company? Why you are not working for a big insurer, for example?
Yeah, so my background is actually as a financial analyst. I've been looking at insurance companies that are quoted on the stock market for close to 20 years at various banks in London and in Switzerland. And then some years back, I had the issue that I wanted to buy life insurance to protect my wife. We were expecting a kid and also had a mortgage. And as a financial analyst specialized in insurance, I thought that should be very easy because I'm kind of the expert on this. And I knew that people have a higher life expectancy in Switzerland than in London because at the time I was moving back and forth Switzerland and the UK. So I wanted to get coverage here in Switzerland. Unfortunately, it was very difficult. I almost had to force companies to make me an offer. They were all insisting on sending around an agent, telling me, well, we can't do this over the phone. It's something where you have to sit down and look at all the information. And even on my insistence, telling them, well, actually, I know what I want. Please just give me an offer. They would still insist that someone should be coming around. In the end, I got 2 offers, but still out of curiosity, I looked in London and it was really, really easy to get quite a few quotes. And what was the real shocker was that the quote I got in London was 50% of the cheapest quote in Switzerland. So that kind of stayed in the back of my mind. I knew, okay, there seems to be a problem. I'm trying to find out a little bit more about the situation, why that is in Switzerland. But at the time, there were hardly any information around. Then time passed and we were talking about insurance, about financial innovation, the fact that everyone nowadays uses their mobile phones, even for stuff like banking or financial affairs. And my colleague, one of my colleagues was an IT professional and says, well, actually, it's really easy to start stuff and do it online. So we decided to apply to an accelerator in Switzerland, the F10, and decided to follow this up, the problem, because we thought actually there can be very simple solutions and probably we are not the only people who have had this problem in Switzerland.
All right. So your company is called SafeSide. So how does it work? And, just explain us the basics. How are you sorting out the problem that you've outlined? That basically you were shopping around for life insurance and there were very few offers, surprisingly, on the Swiss market, and they were expensive. So how can you find the best deal in this particular service or for this particular service?
Yeah, that's a very good question. So the paradigm in Switzerland is that life insurance is a product that's being sold. It doesn't get bought. And that's actually the first thing that we are changing, that we show that life insurance or pure life insurance is actually a really simple product. And basically what it does, it pays out a predetermined sum in case of you dying to the people you decide that they need it. So the only 2 things you as a customer need to decide is how much money should be paid out if you die, that's the second thing, in a specified period of time. So actually, I would say it's the easiest of all insurance products out there. And it's quite surprising that it's made so difficult to buy it online. And what the platform or what SafeSide does, in the first place, it's a platform where anyone can inform themselves what is life insurance, do I need it, and if they need it, to get coverage fully digital, fully online within 3 minutes.
Great. So you should be able to educate yourself on whether you need life insurance and where to get it, right? So what is your unique advantage? I mean, I didn't look for it recently, but can I look for life insurance on Comparis website like anything else, or even on Google? Will that lead me somewhere, or do I need to go through SafeSide, which is a specialized service for this?
Yeah, so you can look on comparison sites or on search sites like Google and so on. But it will be difficult for you to find a service where you don't have to speak to a broker or to an insurance agent. Even on Comparis, they actually point you towards an insurance broker. And the issue ultimately is, it's very simple, that if an insurance agent or an insurance broker has a client interested in life insurance, it's very difficult for him to just sell him pure life insurance, term life insurance, the product that we are selling. He's far more incentivized to use that opportunity of having someone interested in life insurance and sell them an endowment policy or a mixed life insurance policy. And mixed life insurance policy, frankly, in today's world, is a very, very bad thing to buy for clients, because you commit for a very long period of time. There are very large amounts of costs involved and very limited flexibility.
Can you explain it a little bit? What's the difference between the pure and this one?
Yeah, so pure life insurance, as the name suggests, is just about the pure risks that life brings. That can be basically you suddenly dying, or also you becoming disabled. The product we are offering pays out that if you die in a specified time period, a specified term, then it pays out a specified sum of money. So two things that you have to decide as a client: for how long do I need the insurance? And if I die within that period of time, how much should be paid out? If I survive this term, then of course it's like any insurance, you have paid for it, and that's it. So there's no money back. Against that, what the bulk of insurance products that insurance companies are selling, they're called mixed life insurance or endowment policies. And it's mixed because it's got the component of the risk of you suddenly dying or being disabled, combined with a savings product.
Right.
And in a normal world where they give you a guarantee of 4 or 5% savings rate guaranteed, that can be interesting. But in today's world, where interest rates are where they are, the best that they can offer you is a 0% guarantee. It's a very bad idea for clients to buy this. You have only got costs, you've got no flexibility, and impossible to get out if you suddenly need your money because your life has changed.
But it's also for a fixed term, right? So if that term expires, these are my savings, so I can take it out or not?
You're right. So in essence, what you do is you pay a fixed amount on a monthly or on a periodic basis. Part of that money that you pay is getting invested, and part of it is being used up for costs, administration, distribution, and also for the insurance product. The actual risk coverage that you get.
Right. Whereas the pure, I'm paying probably less, but if I survive the term, I get nothing, as you said.
Pure life insurance, it's almost like you just get you get a bodyguard. You have got him on your side. If nothing happens, you're very happy, because this means that you're in no danger. But if something happens, then he will be there to protect you. If after 10 years or something like this, you decide you don't need him anymore, well, you have paid him and that money is gone, of course. You're not going to get any money back because he has provided you a service, even if he doesn't have to work very hard, right, because you're in no danger, right? It's the same with the car insurance as well. You pay even if you don't have any accidents.
Right, but in some markets, there are actually products and companies who focus on what you would call the mixed product, I guess, because they realize that there are a lot of the insurance or life insurance policies where people were contributing. Then they maybe moved to a different employer, right? Sometimes the employer was contributing, things like this, and they forget about it. So frankly, there is some saved up amounts in those policies which are being abandoned effectively, right? And people just leave it like this. So it gets even worse. As you said, don't go and do this because the return on this is bad. Some people actually do it and don't even know the difference between the mixed one and the pure one, and they leave the money to the insurers to spend on maybe new headquarters, as we know, right?
For example, yeah, you're spot on. I mean, the real issues with these mixed policies are manifold. Firstly, 1/3 of people buying these mixed policies, or whom these mixed policies are being sold to, because you actually tend not to buy them yourself, they don't keep them until maturity. And if you give up these policies before maturity, you lose a lot of money that's invested. It's like a penalty that you're getting charged. So for 1/3 of the people buying it, it has been a very bad decision buying this product because they lose money because of that penalty. This doesn't mean that the remaining 2/3, for them, it was a good product, because they might just say, well, actually, I'm keeping the product because otherwise I'm going to lose too much money. But even by keeping it, they're still losing money because they've had to pay for a large amount of distribution costs. To give you some house numbers, let's say an insurance agent sells you a pure life insurance. Maybe he gets a commission of 200 Swiss francs. If he sells you instead a mixed life insurance product, I just say some house numbers now, he might get 2,000 or 3,000 Swiss francs. And this is the real issue. So once he has the client in front of him, he is very strongly incentivized to sell him a mixed life insurance policy, even if it's not in the best interest of the client, because it's in his best interest.
Right. So turning over to you again. So you said, well, you're focusing on the pure life insurance, right? You're helping people to find out whether they need one, which one they need, etc. But how do you make money?
So at the moment, we're getting a commission. But our target model, what we want to have is about 3-4 insurance companies on our platform. And also what we would like to have is like a subscription model. So people sign up to our platform, they get the insurance cover that they required, but the subscription is not dependent on the premium amounts that they pay. And in this way, we can really show that we are providing a service and we're getting paid for the service. We're not getting paid for the amount of insurance that a client actually commits to.
Right. But even if you are paid on a commission basis, nowadays, people go to the website and they make their own decisions, right? So it's not like they're having a chat or a coffee with the broker as an alternative who tells them to go this way or that way. And obviously, that may be influenced by the commission incentives in the background, right?
Exactly. So even today, though we get a commission, we are not influencing our customers to get higher insurance amount or for longer periods, just so that we get higher commissions.
All right, but let's also look forward, as you mentioned, the subscription. So if I'm going to pay subscription to you, then I can choose different policies and things like this. But I'm not going to choose life insurance every month, right? I'm going to do it once in a few years. So why would I pay you the subscription month on month, right?
So the reason is it's just a different model in terms of the commission, and the subscription would just mean that you get all the benefits that we are offering you in terms of having provided the initial access to the platform, the choice in terms of the different insurance companies. But here it becomes interesting as well. Maybe your life changes in the future. Suddenly you might have a child or a mortgage because you're buying a house, and then you want to actually change your life insurance as well. And we would be there for you to help you do that. Or maybe there's a claim and we'll be there for your beneficiaries to fight for you so that they get the money that they are owed by the insurance company. So one simple thing, for example, that we are offering is if suddenly you were stopping to pay your life insurance, we will make an investigation whether something might have happened to you and whether your beneficiary should be informed that there is actually a life insurance that you have got. We don't know how many life insurances have resulted in a claim that has been left unclaimed, because insurance companies don't have an incentive of running around and finding out who's the beneficiary or whether there has been a claim. A claim has to be reported, of course.
Right. And, let me grill you a little bit on the size of the market as well, right? So if you get there with the subscription, will you only be offering the life insurance or also other insurance products on the platform so it's a bit more efficient for you?
Yeah, so we are discussing it with our, so we want to do what our clients want. So we are discussing it with our clients where we should focus our future development. So one feedback from our clients that we really like is, oh, it's so easy how you make life insurance simple and getting coverage. Please, can you do it for other insurance products as well? So it's something that we are considering. But on the same time, we actually want to remain very focused on life and all things that life encompasses. And the thinking behind is a person buying life insurance, they want to make sure if something happens to me, my loved ones are fine. And with life insurance, they make sure that the loved ones are fine from a financial perspective. But most likely, we think that when they buy life insurance, what they're looking for is actually far more than just financial protection. So that's one way we could be developing as well.
All right. So you mentioned the clients. So who are your target clients? I mean, in terms of demographics or geography or, the type of clients that you're targeting?
Yeah, I guess here we need to differentiate in terms of us being a startup, who are the early early adopters, who is the general market, and also whom we actually want to target in a future sort of target model. So at the moment, what's interesting is 80% of our customers are male, which I'm surprised that. I thought Switzerland might be more modern, but maybe it's also because these people are more digitally interested, want to try out new things, or maybe there's some other models in play. Also, what's interesting at the moment, our customers tend to be somewhat older than we initially would have expected, more in the range of 35, 40 to 50, 55. But generally speaking, anyone who has got people that are financially dependent on them is a potential customer. So that includes, of course, parents, people in partnerships, couples that have debt that they want to be paid off. So the partner doesn't have to sit on those debts, but also, for example, entrepreneurs towards their families, because all the provisioning, I guess, all the work has gone into the company. If suddenly something happens to them, what kind of money does the family get out of it? Or also entrepreneurs in terms of the other entrepreneurship partners that they might have in the company. So it can be quite wide-ranging in terms of the customers that we potentially could have. Our customers are not students, not people who don't have anyone financially dependent on them. So if you go to our website and calculate whether you need life insurance and how much it should be, if you're a student, we tell you exactly where most likely you don't need life insurance. And that's very different, again, to an agent or a broker. We have heard quite a lot of stories of people who have bought life insurance during their studies because they've been approached by some brokers that are very, very good and tell them, oh, you're young, it's really cheap. Clever people do this when you're really young. And it really doesn't make sense. It's almost like getting car insurance if you don't have a car.
Right. Okay. All right. So I'm not going to get one. I won't tell you which one I meant, right? So obviously you're based in Zurich, but what is your ambition in terms of geography as well?
Yeah, now, if we're brutally honest with ourselves, the Swiss market is a niche market, like we saw so many products. So we are starting in Switzerland for several reasons. Firstly, because we have had the opportunity to get a partnership with Baloise. Also because we are Swiss-based ourselves to get first learnings. But we see a lot of potential in Eastern Europe, where we think the development of life insurance and all the overall development of middle classes make this product very, very interesting in these markets.
You mentioned the F10 as well, right? So where are you on your journey in terms of, call it a product development or the features? You kind of mentioned the business model for now, what you want to do going forward. But in terms of the products and also in terms of numbers, if you can share, where are you maybe in percentages of where you want to be when you can just say, well, we've made it?
Yeah, so I guess we can always do better. But so where we are in our journey, one thing that's important to highlight is life insurance is a regulated business. And we are not an insurance company. So legally speaking, we are more like a broker. ein Vermittler, as they call it in German. And getting the product up and running with our insurance partner took quite a long time. So we started in 2018. We graduated from F10, the incubator accelerator here in Switzerland, in 2018 as well. But then it took until May 2020, for the first product to be launched. And that's because we are dependent on insurance companies. Of course, if as a startup you're working with large corporations, there's a disconnect in terms of speed that you want to run and that your partner can run with you. What's good is now we have a good traction. So we're seeing increases in terms of clients month over month. So now we can start our kind of phase 2 development, where we want to expand the product offering, not just from one insurance company, but more insurance companies, and also where we can start looking to expand into new markets. You mentioned in terms of where we are from numbers perspective. So I would say we have client number that shows that there is a problem. People want to buy this product themselves and not having to go via agents or brokers. And now the question more in Switzerland is, how large of a problem is this? So now we are looking to accelerate our marketing. We are looking here to increase our resources on the marketing front. And also now we are in the starting phases of looking for funding to accelerate our product development, our marketing, or the growth trajectory, and also our expansion into new markets.
All right. I mean, obviously, it's a very difficult environment to navigate for anybody, established business or startup these days, right? So you mentioned the marketing campaign, the fundraising. So is that what you're planning for this year or later on, or what's in store for you this year?
Yeah, I guess if you ask me about our priorities, of course, priority number 1 is getting more customers. Priority number 2 is getting more customers. Priority 3 is getting more customers. Now, joking aside, it's all about how do we get to more customers. So one thing is we want to add more insurance companies to the platform. So any insurance company listening, if you're interested to getting onto our platform, please reach out. We're also speaking to partners in terms of growth, for example, financial advisors or some other partners where there might make sense to have a B2B2C relationship. Mm-hmm. And also we have started now speaking to investors for potential investment.
All right. So hopefully this all works out. So I'll change the tack a little bit because we started to host an event on Clubhouse. Nowadays, if you're not on Clubhouse and you're on audio, then I don't know what you're doing, right? And but what I wanted to do there is to have a book tips club. And I ask the guests very often about what's their favorite business book. It doesn't have to be about insurance. It can be, or InsurTech. And it doesn't have to be about FinTech either, but the business book. I mean, if you can recommend, and then next time we have a session on Clubhouse or elsewhere, we can mention that as well.
Oh, yeah, interesting. I would say it's a business book. The book I'm proposing in this case, it's a book called Persuasion by Robert Cialdini.
Oh, yes. Of course. Yes, it's on my shelf, on my to-do list since last year.
I can only recommend it, yeah. And in particular for our business, life insurance, something that people always, that they know that it's important, they want to do it, but they always say, I'm going to do it tomorrow. And by the way, I've got a quite impressive testimonial video on our website of a lady who lost her husband 6 years ago. And she talks about her experience of not having life insurance and what kind of problems that meant for her. And what's also interesting is how, as a result, pretty much all her neighbors who have families actually got life insurance in the aftermath. But I find this book, Persuasion, really interesting because a very large part of getting people to do life insurance is about nudging. It's about playing with, not playing, but getting into the emotional part, because ultimately I think getting life insurance is a highly emotional thing. What is the motivation to actually get life insurance yourself for your loved ones? It's the ultimate in terms of altruism. And we have actually had people who told us, well, why should I get life insurance? If I die, what do I have with it? Yeah, and she said, well, your wife and your kids might might like the money, they can do something with it and say, yeah, but I don't have anything with it. So clearly that goes against the altruism, but I think altruism goes really deep in terms of who we are and how we are defined and why we actually have kids. And we go through all of these things as parents. And here, therefore, it makes sense to think about life insurance as well. And that's why I find these techniques and thinkings about how we work as human beings, how we function, really interesting, and I find there's so many applications that could be relevant for life insurance as well.
Well, great. So if the people would like to find out more, what's the best way to reach out and get in touch with you?
I mean, they can always go to our website, www.safeside.live, or come to our offices in Zurich. We're next to Helvetiaplatz. At the moment, of course, a little bit difficult, but once things are a little bit more relaxed again, very welcome to have a coffee with us, to meet the office, to meet the people. And otherwise, we are also on LinkedIn, on Facebook, and so on. Yeah.
All right. Well, thank you very much, Michael, and good luck to SafeSide.
Thank you very much for the time and the opportunity to speak.
Thank you for listening to Voice of FinTech podcast. If you haven't already, check out also voiceoffintech.com, where you will find all the episodes and additional resources related to the podcast. You can also subscribe to Voice of FinTech on Apple Podcasts, Spotify, Google, or any other podcast app that you like. If you have any suggestions on the topics or guests, or how to make this podcast better for you, please email us at info@voiceoffintech.com. Happy to hear from you. Thank you.